Stop trying to memorize 50 different candlestick patterns. It is one of the fastest tracks to a zero balance. In the intraday markets, analysis paralysis is fatal. While a retail trader is flipping through a textbook trying to identify a Harami or a morning star, automated algorithms have already exploited that split second of hesitation. We're moving past the encyclopedia. To find a real edge, you only need to identify 3 specific candles. These shapes cut through the noise to reveal the raw tug-of-war between buyers and sellers. Real edge comes from the ability to read psychological dominance as it unfolds in real time. When you strip away the indicators, price action begins to look like a simple rhythm. The market holds its breath in tight, narrow corridors of contraction, and then exhales into a violent directional move known as expansion. To capture those explosive exhales, a trader has to first learn to identify and patiently stalk the periods where the market is most quiet. There is a golden rule for reading this cycle. While the colored body of a candle shows you who won the minute, the real story of the battle, the shifting momentum, is written in the tails. Successful trading is less about finding abstract shapes and more about spotting built-up energy that is waiting to detonate. This starts with the Lilliput, or the XXS candle. As you can see here, it is defined by a tiny body and extremely short tails. This shape represents dead volatility. It's a moment of total indecision where players step away. Amateurs walk away when the chart goes quiet, but professionals recognize that a cluster of Lilliputs is a spring being tightly compressed. Those boring, flat moments on the chart are actually the countdown to the most aggressive moves. The second pillar is the giant, or XXL candle. Looking at these examples, the defining trait is a massive body with almost no shadows. This footprint of institutional money represents one side taking total control, driven by extreme greed or fear. These candles provide the chronological link we need. When a giant suddenly erupts immediately after a cluster of Lilliputs, a new trend has begun. The giant candle is the proof that the market has finally chosen its direction. Finally, the rejection candle. As this chart shows, the unique identifier is the extraordinarily long tail. The body color doesn't matter. A long tail represents price territory that was aggressively attacked but violently repelled before the candle could close. This creates a specific trap. A long bottom tail means sellers pushed the price down only to be overwhelmed by buyers, while a long top tail catches buyers who bought at the peak of a move. These tails reveal the precise levels where false momentum was crushed by smart money. There's one fatal mistake many traders make: treating these shapes like they exist in a vacuum. Even a perfect giant or rejection candle is useless if appearing in the middle of nowhere. These signals only become actionable when they collide with the architecture of the chart, things like moving averages, pivots, or previous swing highs and lows. To manage risk, we use the 50% rule. As shown here, a counter-trend pullback should never erase more than half of the previous move. If a giant red candle breaches that 50% line, the trend is broken and invalid. The location is what gives the candle its probability. Without it, the shape is just noise. We can combine these elements into 2 actionable setups. The first is the breakout. Imagine a tight cluster of Lilliput candles squeezing against a clear resistance line. The moment a giant green candle shatters that ceiling, you have your precise entry. The second setup is the pullback. This happens when a strong uptrend suddenly dips down to touch a 20-period moving average line. The trigger occurs when a rejection candle bounces its tail off that average, and the next candle confirms the trend's resumption. These 2 setups remove the chaos from the screen, leaving only the signals of compressed energy and definitive rejection. There is one critical warning every day trader must heed. Never make a decision on an unfinished candle. A candle that looks like a glorious giant breakout at minute 4 can collapse into a lethal rejection trap in the final 30 seconds. Patience is the foundation of intraday survival. If a setup isn't perfect, let it go. Eight jayegi to dusri ayegi. If one goes, another will follow. Survivability depends on the ruthless discipline to wait in the calm until the market is forced to reveal its hand.